Jim Bianco is standing by. He's the president of Bianco Research. Jim, are the markets overreacting here?
We don't know. That's the problem. This is all new for markets, that we're talking about a nuclear disaster of this magnitude. Whether or not there's going to be a radiation release, whether or not that's going to lead to some kind of change in the environment there, nobody knows. And that's why the markets seem to be gravitating towards the worst case scenario right now.
What does this feel like to you? I mean, I was asking our CME trader earlier. I mean, does this feel like 2008, the panic of 2008, or what?
No, this is actually somewhat unique, I think. There's really not an overlay. I've been looking at things like whether or not you want to use the 3 Mile Island or Chernobyl or 2008 or the 1987 crash or anything else in between, and this one is unique. Meltdown is a word in our lexicon that has meaning, that means panic and a lot of other things. There's never actually been a nuclear meltdown in the modern world, and we might be having the first one. And the key word there is we might be having the first one. Most of us are not nuclear experts. Most of us don't understand the science behind what's happening, and that's why we tend to gravitate towards the worst case scenario and why it's such a difficult thing to find some kind of a historical overlay for it.
Right, but we're not at that situation. When you say we haven't had a nuclear meltdown, I mean, obviously people look towards what happened in the Chernobyl disaster, and then on 3 Mile Island. This is not yet reaching, obviously, to those proportions, although people are talking about that. Overall, then, when you get to those types of fears or those types of words, where is there to hide, though, then, Jim?
There isn't. You're right. This hasn't risen to the level of 3 Mile Island or Chernobyl. Of course, the big difference between here and Chernobyl is of the economic impact of the area that this plant is at in Japan versus Russia. But there is nowhere to hide because no one has a good handle on it. The obvious answer is 3-month Treasury bills, cash. It won't lose you money. Even 10-year Treasury notes or 10-year Treasury bonds, which are a favorite for the risk-off trade, could violently reverse if we find out tomorrow or the next day or next week that this isn't as bad as we think. The best thing about cash is it won't lose you money. It won't give you any opportunity as well. Gold is not a viable option right now. Commodities obviously are not a viable option. It's just because people don't know, and that's what's inspiring the panic.
For you, is there anywhere in here where there's an opportunity to buy?
Yeah, I think so. I think that in these kind of pure panics, what will happen is the market will overreact. It will overreact too much. Now, that's easy to say today because I could have been on yesterday, or a lot of people could have been on yesterday and said, the market looks like it's overreacting yesterday, and then it goes down another 250 points again today.
Right.
The risk by saying it's overreacting is we're down another 250 points tomorrow or the next day before we eventually hit a bottom. So I think that eventually at some point the market will overreact too much and there'll be an opportunity to buy. Whether that's this morning or next week, that's the difficult question. And if you're too early, you could lose a lot of money before the market bottoms. And that's what makes it very difficult.
And to be fair, Jim, I mean, you won't know that until obviously more developments happen, which will be overnight in Japan. Jim, thank you very much. Jim Bianco of Bianco Research.